Hello, this is Alexander Shapiro, and welcome to another edition of CMS Forex News. Today is Friday, April 25th, 2008. Japan's national headline CPI and the core measure, which excludes fresh food, were both up 1.2% in March. Core inflation saw its highest increase in almost 10 years. As energy was the major driver of prices, inflation was at 0.1% when this component is excluded. The Tokyo CPI, a leading indicator for national CPI, posted a rate of increase of 0.6% for April, higher than expected. Excluding food, prices were up 0.7%. After taking energy out of the equation, prices were flat. The US dollar's three-session rally against the yen stalled at 104.80 in European trading. The pair then fell down to test the level it was at from this week's open. As New York trading progressed, the dollar pared some of those overnight losses despite a weaker stock market. U.S. investors are starting to believe that the worst of the credit crunch problems may be behind them. Speculation that the Fed is done cutting rates fueled dollar strength during the second half of this week. The UK economy grew only 0.4% in the first quarter. The credit crunch has affected lending by financial institutions and has made securing loans harder for businesses and mortgage seekers. Higher inflation and the downturn in housing and property values will work to limit consumer spending even as employment seems to be holding up. Despite the report of weak growth, the pound had a strong day. The pound-US dollar pair set a low near 1.9675, directly following the release, but then recovered and rallied 180 pips. Today's session continued the choppy and volatile trading seen in this pair as of late, and for the week the dollar is set to finish stronger. The euro-pound pair fell 100 pips overnight and 180 pips since yesterday's high. The pound gained as speculation increased that the ECB may be pressured to soften its hawkish stance if the economy continues to give poor economic data like we saw earlier in the week. After today's movement, the pair is back at the levels it set at the end of last week. In the U.S., the University of Michigan Consumer Sentiment Index cast a somber mood as the index slipped to 62.6, a 25-year low. 9 out of 10 respondents said that the economy was in recession and inflation expectations deteriorated in the face of higher gasoline and food prices. Also, many plan to spend their money from the government stimulus package to pay down debt or to save, meaning the effect on the economy will be limited by the plan. The euro continued losing against the US dollar overnight until the pair found support near 1.5560. The euro then recovered following US consumer confidence data. After setting a high on Tuesday, the pair swung more than 400 pips in favor of the dollar. As European data disappointed, speculation increased that the Fed may pause its rate cut campaign after one more 25 basis point reduction next week. The US dollar gained on the Canadian dollar this week, with most of the gains coming after the interest rate cut of 50 basis points by the Bank of Canada on Tuesday. The pair has seen choppy trading since then. This morning, the Canadian dollar gained as oil prices spiked $3 higher following a report that there was an incident in the Gulf region between U.S. and Iranian boats. For the week, the US-Canadian dollar pair is up a little more than 100 pips. Next week will prove to be a volatile, as markets will digest the flash estimate from Eurozone CPI, the interest rate decision from the Fed, and the non-farm payroll data to end the week. Also, the US, UK, and Eurozone will reveal how manufacturing activity held up during April. That wraps it up for this week. Join us again Monday right here at cmsfx.com.